Hi, today from Madrid in Spain. Today we'll be talking about a major misconception about Bitcoin ETFs. I can see that misconception repeated by virtually all crypto influencers. And this misconception stems from not knowing enough, from not having the basic knowledge about how ETFs work. And what it is about, you will find out after a short break. I will explain everything, what the misconception is about and how they really work. See you after a short break. Hi again from Madrid. What is the misconception I was talking about regarding Bitcoin ETFs? So, most of the influencers, if not all of them, talking about Bitcoin ETFs, talking about Bitcoin, they have this understanding or this conception that customers of the ETFs on stock market, they buy an ETF share or ETF, or they want to buy a Bitcoin, and they execute their purchasing price transaction by buying an ETF, let's say from BlackRock, and BlackRock then buys a Bitcoin for them and keeps Bitcoin for them. If they sell their ETF, then BlackRock sells the Bitcoin, and so BlackRock just keeps the Bitcoins for the customers, and the Bitcoins they belong to the customers. So this is a very simple, very simplistic view, and there is almost everything wrong about this view, and it leads to many not only misconceptions but wrong consequences or logical consequences. So let's start with the first misconception. The stock market investors, they are not customers of ETFs, of the ETF issuers, meaning BlackRock, Fidelity, and so on. So who are they? They are shareholders. They never interact directly with the issuer. They act only on secondary market, on stock market, which is a secondary market. And they never buy Bitcoin. They only buy shares of the ETF, of the, let's say, the issuer company, so to say. So, who interacts with BlackRock and with the ETF issuer? These are authorized partners. They are usually large financial institutions, and they have the right to buy and sell shares of ETF directly from BlackRock, Fidelity, and other ETF issuers. What happens when they buy a share of an ETF? And this is where we have a special case in comparison with a normal stock company. Because with normal stock company, they issue stock, they receive money for that, and they just invest the stock or invest the proceeds from the issuance, or they spend it or whatever. But what happens with ETF when they receive the money for the shares they issue? They need to buy the underlying asset. So they have to have coverage in the asset for the issued shares. So in this case, if an authorized partner buys a share of, let's say, iShares Bitcoin ETF, meaning from BlackRock, BlackRock needs to go out and buy Bitcoin to have coverage of that for the shares they have issued. And here another difference is these shares are redeemable. So the authorized partner always has the right to redeem the shares from the issuer and get money for them at the recent value, at the current value of the underlying asset. So if an authorized partner sells or redeems the shares, let's say iShares Bitcoin ETF from BlackRock, BlackRock needs to sell the underlying Bitcoin in order to pay the authorized partner for to redeem him with dollars for the shares they receive. So what are the consequences? The consequences are as following. If investor sells their ETF, there is always a buyer of the ETF on the other side. And primarily, nothing happens actually with Bitcoin at that time. It just can or cannot impact the price of the ETF itself. And only if there is a premium or discount between the ETF and the underlying asset, then there is a potential consequence. It's not a must, but a potential consequence in Bitcoin in, let's say, BlackRock's treasury or the ETF issuer treasury. So when there is a situation of premium, of course, let's define two things. There is supply and demand. And the demand to supply ratio, let's define it need or interest. Let's define it interest for Bitcoin or interest for ETF. So if there is much more interest for ETF than there is interest for Bitcoin, then of course there is a premium in the ETF price. So ETF price is higher than the underlying asset, in this case Bitcoin. What happens then? Then of course what authorized partners do, they are market makers, so they interact, they connect, so to say, the ETF with the stock exchange. What they do is they buy new shares from the issuer in the ETF and sell it on the market with profit. So they arbitrage between the issuer and the market. They make a profit, and of course, if there are more shares, they lower the price of the shares and reduce the premium. And when they buy, of course, the shares from BlackRock, in this case, BlackRock needs to buy Bitcoin to have coverage for the shares they have issued in their assets, right, in the treasury. So the same, another way around, if there's a lower interest for Bitcoin ETF than there is for Bitcoin in the outer market, then we have a discount of the ETF, meaning the price of the Bitcoin ETF is lower than the price of the underlying asset. And in this case, there is an opportunity for authorized partners, again, to make an arbitrage. What they do is, of course, they buy shares from the market and they sell it, or they redeem them with the issuer, with BlackRock, and BlackRock goes out, sells the Bitcoin, and in order to be able to pay the authorized partner for the shares they have redeemed. So this is the workings. And now you can say, so what's the difference? The difference is the following. It can happen, and it happens quite often. There is low interest for Bitcoin ETFs, meaning the price of Bitcoin ETFs goes down, right? So more people want to sell than those who want to buy, so the price goes down. But nevertheless, the issuer buys more Bitcoin from the market. How is it possible? Yeah, it is possible. Easy. It is quite possible. Let's say there is low interest for Bitcoin ETF, but there is even lower interest for Bitcoin in the market outside of the stock market. Meaning the price of Bitcoin goes even lower or falls faster than the one of the ETF. Meaning there is a premium in the market, right? So the ETFs, the price of the ETFs are higher than the price of the of Bitcoin, of the underlying asset. And then, of course, what authorized partners do, they go out to BlackRock and they buy new shares in order to make profit on that. And when they buy new shares, BlackRock needs to buy new Bitcoin. And the same way is another way around. Let's say the price of ETFs can go up, so there can be high demand for BlackRock for Bitcoin ETFs, and nevertheless the issuer, BlackRock, Fidelity, may at the same time be selling Bitcoin. How is it possible? Well, let's say there is high demand for Bitcoin ETFs, but there is even higher demand for Bitcoin itself on the market outside of the stock market. So in this case, there is a discount in the market, and in this case, what the APs, the authorized partners, do, they buy ETFs and they redeem it with BlackRock, meaning BlackRock needs to sell Bitcoin all through, as I said, ETF price is going up. Nevertheless, BlackRock needs to sell Bitcoin in order to satisfy, to pay the authorized partners for the shares they redeem. So, you see, there is a lot of misunderstanding. It is not absolutely not the case if you sell your ETF, anything happens, or BlackRock needs to sell the ETF, even if all people, like, let's say, there's low interest and the price of ETFs go down. It still doesn't mean BlackRock needs to sell any Bitcoin. It may even act in the opposite direction and buy even more Bitcoin. So the relation between these two market actors is much more complex than the influencers want it to be, and the influencers repeat. So I hope I could explain it to you in quite a detail. If you have any questions, you are welcome to put them into the comments. I will be happy to answer these questions in one of the next videos. That's it for today from Madrid. I hope you like this video. If yes, give me a thumb up. If not, of course, thumb down. Subscribe if you haven't. Share this video with your loved ones, with your friends. One day they will thank you for that. I talk here a lot about money, about cryptocurrencies, about how the best entrepreneurs in our life and in our world think and act. So if you like this video, you will certainly like my other videos. I invite you to watch them. That's it for today. Wish you a fantastic day. Let's do something extraordinary today.